Hi, this is Eli Levy. I'm here with Cannon Trading. Today I'm going to show you how I use the RSI indicator to help me with entry and exit points on the CannonX platform. But before I get started, please pause your screen and go over the disclaimer. If you guys read my article this week, my weekly market update, which you can find on Cannon Trading Facebook page, I actually indicated that the SPX has found support at the 100 moving average since May. One time right here, another time right here last week, and again it happened yesterday. They broke through the 100-day moving average and they came back and closed above the moving average. So how did I use the RSI to help me understand what's going on? This is the CannonX platform. What I usually like to start with is a is a 4 hour time frame graph, as you can see right here. The RSI is right on the bottom. We say that anything below 30 is considered oversold, anything above 70 is considered overbought, as you can see right here. 30 oversold, 70 overbought. If you noticed, okay, the the E-mini started coming in yesterday, right around these levels, and they've created a low. The RSI has created a low as well at 22. If you're noticing also, every time the E-mini goes up, look at the RSI, goes up to the 70s, 80s area. Every time they go down, the RSI goes down to the 30, 20 area. Overbought, oversold. You can see that happening in the 4 hour indication. So whenever the RSI is at extremes, that means that the market is at extreme. So yesterday we had a line of the what I said, the 100-day moving average, whereby we approached that area, which was right around here. The RSI gave me a low of around 22, 24. Then what happens is the RSI starts to now round up. How do I know it's rounding up? What I usually do is I break down the time frames into 4 hours, 60 minute, 15 minutes, 5 minutes, and 1 minute. And then I go through them one at a time to try and show me what happens. And let me explain that how that works. So as we see, it was somewhere around 10 a.m. and I'm noticing on the 4 hour that we are oversold and something could be happening here. We should be going back up, right? Which is right around where the 100-day moving average is. And they broke the 100-day moving average. So what I do is I go to a 60-minute graph. When I look at the 60-minute graph, I get that same indication. Oversold, which is all the way at the bottom of the RSI, which got down to like more or less like 13, right? And the market keeps going down, but it's starting, the RSI is starting to curl back up from the oversold condition. Then what I do is I go to the 15-minute graph, and then I'm looking for the same thing to see if that's happening on the 15-minute graph. And here we are going into oversold territory, creating a low right around here, as you could see with the RSI. And then what happens is I'm going to teach you a trick. The market makes a new low, but look at this. The RSI is not making a new low. Hey, look at that. That's an indication usually that the market is not agreeing with the price movement. That means that it's falling, but someone is buying at these levels. And then what I'll do is I'll go to a 5 minute graph when I actually enter the trade and the 1 minute graph to actually help me understand if I'm entering at a good point on the long or if I should be covering some of my shorts at that point. So here we are, 5 minute graph, right? It's 10 a.m. in the morning. The market's making a new low, as you could see right here. But what's happening in my RSI? I see from the pre-market that the RSI was down at 24. Okay, this was at 8 a.m. in the morning. And then right around 10 o'clock on the 5 minute chart, I actually see a higher low on the RSI. But the market's giving me a lower low. So I know that something is happening here in this area. That means that the RSI is not confirming what the price action is showing me. Therefore, I am now considering this whole entire 100-day moving average area. Are we supporting it? Should I cover some stock here? That to me is an indication that we're actually not going lower until I get some confirmation also from the RSI and not just from the price movement. So that'll give me an indication, maybe cover some of my shorts. This is a good area to cover some of my shorts. Let's say I don't have a position and I want to enter a position. What I usually do is I start with a 1 minute graph, and I'll show you that right now. So if I'm looking to enter the trade on for a very, very short time, I go to the 1 minute graph, okay? And then I try to pinpoint according to what I see in the 1 minute RSI. Because if the 1 minute RSI is very oversold, I know that I'm actually maybe catching here, chances are that I'm catching here a good price point for entry for my trade. You see, the RSI is very oversold at 13. What happened after that? The market price actually goes up. So what I do is I'm using these as indicators to see my entry points and overall entry point as what's going on in the market right now. Back to the 4 hour, what happens every single time on an overall basis that the RSI is oversold? I know that the market might make a push up. This would be used more for a swing trader, okay? The 5 minute, the 1 minute would actually be used more for day trading for shorter entry points and shorter exit points. But overall, you would get an indication the 4 hours curling up. Oh, great. Look at that. The 4 hours curling up. Let's see what's going on in the 60 minute. Oh, the 60 minutes curling up. If the 4 hours curling up to here to 27, the 60 minute is probably already at 40. Okay, so you're getting an indication. And then when the market starts to turn down, you'll see suddenly the 4 hour will be at 46 and the 15 is already at 80 when you're looking at the 15-minute graph RSI. It's already looking at 80, and over there, there's going to be some sort of a correction. And you know what? We got a couple of bars on the 4 hours that were also a correction. That means that the 15 was probably at somewhere around 70 or 80, and it stopped and it corrected back down because what happens is in order for the 40 to be able to reach back up to 70, the 15 goes all the way up and down a few times. It would just happen on an uptrend. Let's see if I'm right. That I told you off the top of my head. We'll see if that we can actually see that. And yes, we could see that. You see this? Look at this. You're getting an upward sloping trend line. If you take a trend line and draw it up here, from this point here to this point all the way up here, you're also getting an upward sloping trend line in 15. But what happens in the 15 during that time? It goes up. So the 40 for the 4 hour, let's say RSI will go up from 20 to 30. And then the 15 has to come down, right? It comes down only to 28. It makes a higher low than the last one goes back up. Meanwhile, the 40 is going from 30 to 35. Oh, it reached a high point, coming back down, some sort of a correction. And meanwhile, you're getting an upward sloping trend line. So this is an indication how you could use all RSIs in order to understand what's going on. If you need help with this, feel free and comfortable to call me. I'm here at Cannon Trading. Ask for Eli Levy. I hope you guys enjoyed this video. Have an amazing day.